Okay, good morning, everyone. Looking at the US stock markets, the Dow has earlier on retreat from the recent peak of around the 27,000 psychological level, which is also the near the all-time high. Subsequently, the Dow has formed the shooting star candle along that, and the Dow has pulled back below the EMA 20, which is around the 26,500 points, with the falling below. With the valuation below the 26,500 points level, we did see the Dow has pulled back towards the recent low of around the 25,000 before staging a mild recovery just towards the EMA 60. However, the lack of follow-through buying interest beyond that has seen the Dow Jones sell off over the past like 1 to 2 trading days again, as the Dow has pulled back below the towards near the 25,000 psychological level. So for now, we could expect some of the further weakness on the US stock markets for the Dow to trend back towards the 25,000 to see how it holds there. If the 25,000 level were to give way, further pullback will be seen for the Dow Jones back towards the 24,000 psychological level. In the meantime, should there be any recovery pattern from the 25,000 and the Dow were to be recovered its position from that point onwards, then we could see further upside back towards the 26,000 or even towards the 26,500 points level. Similarly, on the S&P 500, the S&P 500 has earlier hit the recent peak of around the 2940 level. Since then, the S&P 500 has pulled back below the EMA 20, which is around the 2900. Subsequently, the S&P 500 has pulled back towards near the 2700 psychological level. After touching near the 2700 psychological level, we did see some of the mild bargain hunting activities on the S&P 500 just towards the EMA 120. It rejected the EMA 120 and reversed its position over the past 1 to 2 trading days. So for now, we could take this as the technical rebound before the next wave of pullback for the S&P 500 to trend back towards the 2700. If the 2700 were to give way, further pullback will be seen for the S&P 500 towards the 2600 psychological level. In the meantime, should there be any recovery beyond the 2800 or the EMA 120, then we could see the S&P 500 recovering back towards the 2900 psychological level. The weakness on the US stock markets overnight was mainly stemmed by the ongoing concern over the trade dispute between US and China, which could impact the global economic growth, coupled with the concern over the rising US interest rate. Also, the mixed bag of corporate earnings have not provide any elevation to the US stock market sentiment. On the crude prices wise, we are seeing the crude prices has recovered from the $64 barrel level. Since then, the crude prices has touched the recent peak of just marginally below the 77. Subsequently, the crude prices has pulled back, and recently we are seeing the lower low and also the lower high formation on the crude prices for now, as the crude prices has violates below the $70 barrel level, and the selling pressure was noted on overnight. For now, on the crude prices wise, we could, given a 2-day sell-off, we could expect some of the mild recovery pattern towards the 70. If the 70 level could not hold, then we might see further retracement of the crude prices back towards the 67 or even back towards the 64. In the meantime, should the 67 level were to be reached, we might see further recovery on the crude prices. Just gains will likely to be limited towards the $73 barrel mark. The weakness on the crude prices was mainly due to the rising US inventory level. Okay, on our local front, the FMKLCI has earlier been trading between the 1770 towards the 1830 level. Subsequently, the renewed volatility across the global stock markets has seen the FMKLCI falling below the 1770 towards the 1700. It managed to recover to close is positioned above the 1700 psychological level, just towards the EMA 9, and subsequently on yesterday we are seeing the mild pullback on the FMKLCI, tracking the weakness in the global equities and also the weakness in crude palm oil and also the crude oil prices. We might see further weakness on the FMKLCI over the short-term period, back towards the 1730, or even back towards the 1700 psychological level. So for now, we are taking this as the violation below the 1700, a technical rebound, and the next wave of a pullback for the key index to retest the 1700. If the 1700 level could not hold, then we might see further pullback towards the 1660 level on the FMKLCI. In the meantime, any gains for now will be just kept towards the 1770 level over the short to mid-term trading period. On the FM small cap wise, we are seeing the FM small cap index has staged a pullback since the 2nd of October, where we have mentioned in the potential stock discussion group. Subsequently, the FM small cap index has violated below the 13,645 points and it pulled back. But the next day itself, we are seeing after a gap down on intraday basis, we are seeing bargain hunting activities on the low liners, as the low liners has staged the technical recovery just towards the EMA 9 level. Tracking the weakness across the global equities, we could be experiencing some of the gap down formation, at least for today, and the weakness will likely to linger for the rest of the day, as the FM small cap index will likely to trend back towards the previous low, which is around the 13,100 points level. In the meantime, until we can see a breakout and a closing above the 13,645 points, only we can confirm for the FM small cap index to trend back towards its previous consolidation range. On stocks wise, some of the stocks that we can watch out for, one of it will be HSS Engineers. HSS Engineers has earlier on staged the sharp retracement towards the 44.5 cents level. Subsequently, price staged a very strong recovery back towards the 1.15 cents, almost tripling its price. But after a 1 day rally towards the 115, we are seeing the next day itself a heavy selling pressure was noted on the HSS Engineers, with another higher than previous days volume being traded. So this implies that the buyers during this day, most of them has already been out of the position on HSS Engineers, and subsequently HSS Engineers has staged the sideways consolidation range. So for HSS Engineers right now, we're going to monitor for this potential short-term breakout above the 92 cents. Until we can see a price breach and a closing above that, it did manage to retest the 92 cents level yesterday, accompanied by some of the improvement in volumes, but it did not close above that. So let's monitor for the breakout above the 92 cents level for now, for us to trade HSS Engineers towards the first target price at the 1 ringgit and 4 cents level towards the 115. Your stop loss point will be located below the recent low, which is located towards the 84 cents level on HSS Engineers. Should price breach and also close above the 92 cents, we could expect the MACD indicator to issue a buy signal, whereas the RSI could be recovering back above the 50 level as well. On UGTech, price has staged a strong recovery following the recent pullback towards the 219. Subsequently, price has hit towards the 3 ringgit and 38 cents level. After touching the 3 ringgit and 38 cents, price has pulled back and traded on a sideways manner, but we can see a lot of support along the EMA 120. Earlier, we did see a hammer candle being formed along the EMA 120. Once again, some of the hammer candle was being formed along the EMA 120 level as well. So for UGTech right now, we're going to monitor for this consolidation range between the 2 ringgit and 93 towards the 3 ringgit and 14 cents until we can see a breakout above the 3 ringgit and 14 cents, given that price has staged a 2-day recovery from the EMA 120, accompanied by some of the improvement in volumes. Let's monitor for the breakout above the 314 for us to trade towards the 338, or even towards the previous all-time high of the 3 ringgit and 57 cents level. Your stop loss point will be located towards the 293 on UGTech. On E-metal, price is still on a downtrend of formation, so any recovery from now will be just taken as a technical rebound play. Price has earlier formed the double bottom formation along the 42.5 cents level. Earlier we did see a good support along the 42.5 cents. Price did recover towards the EMA 120. It rejected the EMA 120 and pulled back just back towards the 42.5 cents again. Once again, we are seeing a recovery towards the EMA 120, but it rejected the EMA 120, and the next day itself, we did see consecutive days of selling pressure. So for E-metal right now, we're going to monitor for this short-term consolidation breakout above the 49 cents. It did attempts to breach above the 49 cents level, accompanied by some of the improvement in volumes, but it did not close above that. So let's monitor to see in the short term whether it can break out above the 49 cents. If price were to breach above the 49 cents, we could trade E-metal towards the 53 or even towards the 56.5 cents level with your stop loss point located below the 45.5 cents level. On indicators wise, everything appears to be quite neutral right now, as you can see that the MACD line has been hovering near the zero level over the past couple of days, whereas the RSI has been flirting just marginally above the 50 level as well over the past 2 weeks trading period. Last two company for the day will be firstly is WCT. WCT has earlier recovered from the recent low of around the 68.5 cents level after a few days of climatic selling pressure accompanied by some of the improvement in volumes. Sorry, not improvement volumes, some of the climatic volumes being traded. Subsequently, we are seeing the WCT has staged the recovery just towards the 1.09 cents. It rejected the EMA 120 and traded on a sideways manner since then. For now, we are seeing a good recovery pattern given that WCT has formed the double bottom formation along the 79.5 cents. So for WCT right now, we are going to monitor for this trend line breakout beyond the 87 cents. Should price breach above the 87 cents level, we could expect a further technical rebound towards the 96 cents or even towards the 1.02 cents level. Your stop loss point will be located towards the 79.5 cents on WCT. With price rising and also close above the EMA 20, we are seeing the MACD indicator has already issued a buy signal just as still below the zero level for now, whereas the RSI is approaching the 50 level as well. Last company for the day will be a London Biscuit. London Biscuit has earlier trended lower towards the recent low of 46 cents level. After touching the 46 cents, we are seeing a good recovery towards the 61 cents level, and subsequently, London Biscuit has staged a mild pullback and traded on a sideways manner since then. But during this period of trade, which is around the past 2.5 months trading period, we are seeing a lot of volumes being accumulated or being traded on London Biscuit right now. So let's monitor for this short-term trendline breakout, which is above the 55 cents level. Should price breach above the 55 cents level, we could expect price to hit towards the 58.5 cents or even towards the 61 cents level. Your stop loss point will be located towards the 52 cents on London Biscuit. On the indicators wise, you can see that the MACD indicator has already issued a buy signal yesterday, given that price has already formed a bullish candle, whereas the RSI is retesting the 50 level for now. If you have any questions, you can put in the chat box and I'll reply you shortly. If there's no question for today, then we'll end the morning briefing. Thank you.